Hey everybody, Dave Soblik here from Realty One Group and the HomeAdvisor.pro team based here in Portland, Oregon and Vancouver, Washington. Today's video, why am I doing this? Well, a lot of my clients right now are asking about what to expect in the next year ahead for the real estate market. And so I can give you a very short answer. A lot of the same in 2021. Let's kind of recap last year. We've had inflation happening, supply chain issues happening. We have had very good appreciation happening. All of that is going to continue. COVID hit us about 22 months ago, and it really accelerated what was already happening. And that is, we were getting a tighter inventory situation. And especially in 2021, it got really, really tight. On average, in our metro area, we were like 1 month supply on hand or less. So we're going to see a very similar situation going forward in 2022, okay? So supply and demand, basic economics, that's gonna increase values, okay? What else is gonna increase values? Well, the fact that we're having supply chain issues, labor shortages, we're now starting to get inflation that's happening, all of that is increasing costs. What's increasing costs, we're not building as many homes, there's more people moving to our metro market, which is increasing overall demand. So supply and demand, high demand, low supply, appreciation. So think about it, in the last year, last 12 months, on average, depending on where you're at in the metro market, we've had 15 to 20% year over year appreciation. It's fantastic. It's been bananas, actually. We will have appreciation next year as well. So if you're like, I want to hold off on the market, I want to see what it does, don't. It will cost you money, okay? So think about it this way. National average is projected to be about 5.7% year-over-year appreciation in the next 12 months. I can tell you in the metro market here, we are going to see high single digits to low double digits happening, okay? So let's use 10%, $500,000 house on average. I'm using round numbers, but that's $550,000 a year from now, right? You know where that $500,000 house was a year ago? Do the math, right? You follow me. So keep in mind, if you're not in the market right now, this is a good time to get in the market. And if you're not sure how to get into it, give me a call. We'll figure out a way for you to do it. What else is happening? Well, in 2021, interest rates were at record lows. So people weren't moving as much. They were refinancing, they were taking some of that cash out. They were either going on vacation, they were doing home renovations, or they're buying investment properties. There's a lot of different things that people were doing, but it's going to continue. We're going to see more value in our homes. So look and see where you're at. You don't want to have all that money. A lot of people are like, I want to pay down that mortgage and not have a mortgage. Well, why do you want to pay down that mortgage, have a house that's valued at $500,000, and you got $500,000 sitting there? Yes, you're living in it, but that money's not going to work for you. So you might want to consider doing a cash out refi and still take advantage of relatively historic low interest rates. Speaking of interest rates, they are going up a little bit, and they're going to continue to go up in 2022. Okay, so we saw refinances under 3%. We saw 30-year fixes at 3% or maybe just under. We're ticking up a little bit. By the end of 2022, we should see the interest rates on a 30-year be in the high threes, maybe low fours. Overall, historically, quite low, but it's going to be much higher than what we've had in the last year. So why is that important to know? Well, it's going to increase the cost of your loan overall. It's going to increase your monthly mortgage payment and the overall cost of that mortgage after 30 years. So if you want to keep that debt down, you want to get in the market here sooner rather than later and get into something, okay? All right, what else is going to be happening in 2022? We are going to see continued supply chain issues that are going to affect the building cycle. I mentioned it before, but long story short, there's a lot of building permits that are out there, but with the demand that's happening of the growth of people moving to our metro area, we are not able to keep up with the demand and build enough inventory out there. So beauty of our market, we are in a nice little pocket where we are in a high demand. We are the most affordable metro market on the West Coast. Even though our prices are going up, we're far more affordable than Seattle, SF, LA, San Diego. So keep all of that in mind. It's all relative. But at the same time, it is money, and we want to make sure that we're managing it the best way possible. So where do we go from here? Well, there's a lot of different ways you can go about it. You know, there's still an opportunity if you're looking to get into that home of your dreams that you haven't quite done yet, probably sooner rather than later. You can still sell your house for top dollar get a relatively low interest rate and get into that home that you want, really capitalize on all that appreciation you've had over the last couple of years. And if you're renting right now, this is the time. Get in and see if you can fix that overhead for you, okay? All right, so 2022, long story short, you know, it's been a crazy year. It will be another relatively crazy year ahead with a tight inventory market. We will see appreciation. We will see interest rates go up. So if you have any questions, if I can be of any assistance to you, please give me a call, send me an email, where I can help you. Love to be able to do so. In the meantime, hope you guys have an amazing day and good luck to you and crush your goals in 2022. Thanks.